Hello traders, Gary Wagner here just before noon in Honolulu, before 5 in New York. It is Tuesday, 20th day of February 2018, and this is the daily report for gold and silver. Sharply lower pricing across the board in the precious metals, with gold giving up about $24.30 on the day to close at $13.31. That, of course, is basis April's futures. We did pull profits on our trade yesterday. We, of course, will cover that in detail as we pull up our technical studies. Silver down 29 cents, 16.42, and all of that due partially to an extremely strong U.S. dollar, closing up 63 points, over 0.6% in terms of the gain at 89.64. Major pressure in U.S. equities, with the Dow Jones Industrial Average closing off about 254 points. That's after reaching a low of over 300 points, closing at 24,964. And the big mover to the upside today is Bitcoin futures, closing at 11,730 and 11,750, respectively, for the CBOE and the CME futures contracts. Traders, absolutely no doubt, but we have substantial selling pressure in both gold and silver, with gold trading off 1.8% on the day, currently down about $24.60, fixed at $13.3160. That selling really began yesterday in what is the evening session for those on the mainland and the East Coast. As President's Day concluded, the evening session began as the market opened up overseas. Now, selling was moderate yesterday, but to me, the fact that we were unable to take out this current high, which resides just above 1360, really created not only a double top, but told me that there was a very strong potential that we would see further erosion in terms of the price point in gold. And so we took our effective stop, which had been sitting at 1333, and we trailed that up to 1341.50. and effectively had that stop take us out, and the net result was the pulling of profit of about $18 as we entered the market long at 1323 and exited our trade at 1341.50 as our stop was hit. We are now effectively flat with no active trades in either gold or silver. So traders, what are we looking for in the short term as well as the long term for gold pricing? Effectively, this most recent move matches up, as I said, not only with really this double top, but on a very loose sense, we can also see the tops that were formed in September 2017 coming in very, very close and effectively creating somewhat of a triple top in the market. So we know that we have substantial resistance up at this particular price point. And given the fact that we have effectively seen some strong selling pressure enter the market after a failure to take out those tops, I believe we could see on the short term a further decline in pricing in gold. My particular targets are the 38% retracement level, which resides at approximately 1317. This, of course, bases April futures. And then below that, in terms of a major support area, that would come in at around 1300. And 1300 is a 50% retracement of the most recent rally from a 1240 up to 1360. Therefore, we will remain flat and look to re-enter on the long side if the selling pressure continues as the market approaches these two particular price points, awaiting for some sort of technical confirmation, a price bounce to indicate that we are witnessing a V or key reversal. Silver is also trading under some pretty dramatic pressure, down about 31 cents, a net decline of 1.9% at $16.39. We have not been as bullish on silver as we have been on gold, and the major reason for that was first the fact that the 200-day moving average is still sitting above the 50-day moving average, and pricing has been under the 200-day moving average. Now, in terms of this current sell-off, we have potential support that resides at roughly 1635. That is a 61.8% retracement, and that retracement starts in July of last year when silver was trading at $15 per ounce up to these tops at $18. We want to see if we get further selling in the market, if this particular price point, the 61.8% retracement level, finds any support. If not, I would look for silver to decline as low as 1584 to 1560. That is based upon a couple of factors. One, the 78% retracement level, and these most recent bottoms that came in the market at the end of December before moving substantially higher at the beginning of this year. And traders, lastly, I do want to take a look at Bitcoin futures, this being a daily chart of the CBOE single Bitcoin contract, as it has traded substantially higher on the day, resulting in a net gain of over $1,500 today, a gain of about 15%, closing at $11,690. On this particular chart, we have just added a basic fib retracement, which begins at the absolute highest point that Bitcoins have ever traded and have traded since the creation of this futures contract, down to these record lows, which is the lowest price that Bitcoin has traded to since futures trading began back a couple of months ago. And when we do that, we get our various levels. As you can clearly see, we are currently trading just at or above the 38% retracement level, which comes at 11,555. Currently, we have Bitcoin futures trading at 11,690, so it is slightly above this particular price point. If in fact we see this market effectively take out this price point, the next real level of resistance does not come into the market until 13,286, and that of course is based upon a 50% retracement. Traders, obviously in hindsight, we hit a double top in the market late last week when gold prices reached an apex of roughly 1363, but could not sustain that. From there, we saw some weakness coming into the market yesterday once President's Day closed and it started to trade overseas. We sent out a special trade alert and effectively got out of all of our positions at 1341, pulling a pretty decent profit on the day. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.